Good afternoon, this is Rich Nelson with Allendale, covering the wrap-up commodity comments. Today is Wednesday, October 12th of 2012. Quite a big day, of course, as Paul mentioned in the morning comments here. Quite a big day as far as news. Of course, all base fundamentals. We got two things, in fact, here. Not only just the USDA report here this morning, which was, of course, a big factor of conversation, but as well as that, we have those rumors, of course, of China buying potentially corn as well as soybeans here. Corn did a great job today, only closing down a half cent. It did a great job coming back from those lows of 6.28 3/4. So USDA's report was clearly bearish corn. That's if you believe the numbers as they are. Keep in mind, this October report is probably more of a production-based report. The demand side is still a big question because, you know what, we're only in month number 2 of our new crop marketing year. So USDA still has to predict demand pretty much for the next 10 months straight. So these demand numbers we got in here today, which USDA did lower for corn, which was a big surprise, certainly are going to be fluctuating, and they will be moving in the next few months here. So as far as the corn goes, did a great job coming back from those early morning lows. A great job kind of rejecting USDA's report numbers, which had those ending stocks going almost up to 900 million bushels for new crop. So quite a good job for corn, and it tells us right now they certainly are feeling a little better about things than what USDA suggests. Soybeans up 3 3/4. Keep in mind, USDA report is actually a net bullish issue for soybeans. So it was, you could almost argue that soybeans should have maybe even done even better by the close here. So that's also one thing to keep in mind. But while we do have some pretty good soybean fundamentals for new crop, keep in mind this market is generally being priced right now off of corn, not necessarily soybean only fundamentals here. As far as wheat, obviously kind of a big disappointment all around, down 34 cents for the Chicago and even the Minneapolis contract. The KC didn't do as bad. Some key things we were kind of slapped in the face here today with was, though we knew we would have that production revision from that small grains report on September 30th, we knew that would show up on today's report. We were a little surprised and almost a little disappointed that USDA chose to drop exports out of spring wheat as well. So instead of these producers recognizing, or I should say being recognized for having such a tight crop right now in terms of size up on the spring wheat areas, USDA chose to say, well, you know what, we feel that's going to be offset by lower demand. So it was a little concern here, and it was quite a bit disappointing as far as the wheat side. So we can't say that wheat did as good of a job as corn or soybeans here today. As far as outside market issues, U.S. dollar, which was around 40 cents lower before the grain open, finished the day down about 67. So that was another slightly contributing factor towards that slightly supportive trade on the grains here today. As far as livestock, cattle down about 40 cents on the December contract. Keep in mind, our focus, of course, is still about the 2012 picture, and USDA had some good things to say about that side for beef. As far as this report, while we all know of today's report as being a kind of a grain report, keep in mind USDA gives a full breakdown on supply and demand for all livestock and meats as well. For the big thing we saw in today's report for 2012 was USDA said that the amount of beef available to the U.S. consumer, so this is beef left over after exports and all those issues, will be down a full 6% lower than last year. And it was just last month that USDA was using a more moderate 4% lower number. So our meat deficit that Allendale's been talking about for some time for 2012 was recognized by USDA here today. So this is certainly a pretty bullish issue for 2012-based live cattle pricing. As far as hogs, up 67 on the December contract. Keep in mind the defers were down here today. As far as USDA report, well, you got two things we're looking at. Number one is corn prices, which actually there hasn't been as good a correlation with corn to hogs as recent days. But the other issue was the fact that we were looking at the USDA report. And USDA was a little bearish in today's numbers for pork. They added a little bit to exports, or added a little bit to production totals for 2012, and did not really get too excited about supplies for 2012 here. So bottom line here, you know what, we're still kind of waiting to confirm this top here in the hogs, waiting to confirm that China is done buying U.S. pork, and the market is still kind of in a wait-and-see mode right now here. So overall, kind of a mixed trade here as far as livestock goes. But quite a bit going on tonight's report. Quite a bit going on with your Allendale broker that you guys work with, 1-800-262-7538. If you haven't talked to him yet today, probably certainly get on the phone here tomorrow and find out what's going on and what our current viewpoints are on those markets, trading, what type of hedging and marketing plans we have laid out here for producers with this new information, and of course speculative trading ideas as well. Give us a call, 1-800-262-7538. Thank you.